Hello, my name is Steve Bigelow with the Candlestick Forum. Market direction is still slow, steady uptrend. As we can see in the Dow, ever since we did the bullish harami telling us the selling had stopped, and they did a doji sandwich up above the T-line, we're in an uptrend. But now we're hitting the top of this channel. It's just something to be cautious about. There's nothing yet to show that there's any major change of investor sentiment. Same scenario over here on the NASDAQ. They came back up through the T-line after a big morning star type signal, and now they're trading above this level in new high territory, implying that the uptrend remains in progress. Keep going in these waves. So right now, it's still a little bit iffy, but here is a major factor of being able to analyze the market trend with much more accuracy. Not only knowing that the trend is moving in a positive direction, but just assimilating this to the fact that there is bullish investor sentiment, no selling fear. That's what makes this investor confident produce big price moves. We're demonstrating this because in our chat room, somebody pointed this out, that when it was trading up here, it was a good trade because it was a kicker signal breaking this downtrend. So here's always the rhetorical question. Do you chase after something like this? Well, candlestick analysis takes that guesswork out of the trade. If you can go to your 10-minute chart, you may not have been buying it in here on the initial move, but look what was happening. It was setting up as a nice J-hook pattern, knowing that the expected result of a J-hook pattern, or I'm sorry, your fry pan bottom, not J-hook pattern, but fry pan bottom setup tells you they aren't selling it off. There's more upside. That is a place where you could be buying still with the confidence that they aren't selling this off. So that also led us to NCTY today. When doing a simple scan, seeing there was a kicker signal forming on NCTY, same scenario. You might not have got it over here, and you may not be buying it here, but if you could see what was setting up, a fry pan bottom, you could be buying here. Why would you be buying here? Because we know the probabilities of a fry pan bottom is going to be more upside, and we already saw on the daily chart that it was a kicker signal. The prospects for pricing going higher was much greater. So anytime we can see what the signals are telling us in the appropriate conditions, such as the oversold condition, notice all the doji hammers in Zoom right smack dab off the 50. Then today they took it up above the T-line. What's this imply? Wave one, wave two came right back to the level everybody was watching. We could see what the investor sentiment was doing at that level, and then a good indication that they're coming back into this one looking for wave three. It works just as well on the bullish side as it does on the bearish side. We know that we have high probability selling after we see a sell signal and then another sell signal, a doji gap down through the T-line, your bearish best friend. What's the implication? First target was filling this gap, which it didn't quite do today. Second target is what everybody else would be watching, the 50-day moving average. This is not rocket science. This is merely identifying the strength and weakness of a price move based upon the candlestick signals and patterns that the Japanese rice traders have observed for hundreds of years. So when we use the information built into the signals and simple basic rules, there's your bearish engulfing signal, and just a rule of thumb by the Japanese rice traders, the bigger the signal, the more compelling that trend is going to continue. So right now, as long as this overall trend remains above the T-line, you want to stay predominantly long, but there are still some very good short positions to put in place to kind of mitigate some of the risk of being too long or too short in a market trend. That'll be it. We'll see you in the chat rooms.